What's going on, everyone? Today's May 22nd, 2023. We're here to talk about gold to see if the U.S. debt ceiling debacle this week, if it's impacting gold's price and its price movement. So let's get this video started because obviously people are positioning themselves to at least minimize losses and then at best profit from this confusion and or chaos. Why will gold be impacted by what the United States government is going to do with their debt ceiling? Like, it would be asinine for people to think that the United States government will default, will not increase the debt ceiling. It will have reverberations across the whole economy, not just the United States. Now, of course, there are other world governments who would have loved or who would love to see the default and the United States not increase their debt ceiling. Just imagine the immense power that you have to simply sign a couple of documents just to increase the nation's debt. Nobody has any say so about it. It's only you who has the ability and the authority and say, yeah, let me just increase my debt. Isn't that crazy? That's the world that we're living in today, is that you have the ability to simply go out, and that's like you with a credit card and you're nearing your max of your credit limit, and you just wake up one day and say, all right, cool, I'm going to increase my limit another 10 grand. I'm going to increase my limit another 50 grand. And you just simply sign a document and you just continue to increase your debt. That is the United States today. And if you think that that's going to end well, then something is wrong with your mentality. The inevitable is going to happen eventually. That's why the market currently in gold has been trending higher. People are trying to take their assets and place it in a different commodity, a different instrument that is going to hold its value, because the dollar is not going to hold forever into perpetuity. You guys can see that gold has been on a fantastic run. I mean, I did a video in gold on March the 14th. Let me show you. And people try to tell you that you cannot time where price is going to go. Here's another perfect example. This is where the price in gold was back on March the 14th. We were bullish in the commodity. Price went up. And then take a look at that. What do you know? What do you know? Look at that. We told you that the market in gold was going to hit that $2,070 price. You see that, right? Of course. So I'm not surprised that price in gold is down right now, because we said that that was going to be resistance, $2,070 for gold. And here it is today, right when the market here on May the 4th hit a high of $2,067 right there. That was the top. That was the top. That was the apex. And since that day, look at what gold has done. It went down. So that's why it's very important for you to know your entry and your exits. Now, we're still in profit now. If you didn't grab out the profit there of 8.86%, if you were to get out of the market now and gold, you still have 4% profit. Hey, that's what we do. We maximize the ability to grab profits. So let's go ahead and get rid of that. Now, obviously, this is the third time that we've seen gold come up here to $2,070. You saw it here back in August of 2020. You saw it a second time in February 2022. And we saw it a third time the month of May. Right there. So 3 times the charm. This is a firm area of sellers in the market in gold, period. Now, we're just simply consolidating within these 2 lines, so it's not detrimental that price is getting rejected in gold. The market is simply telling you that you shouldn't be a buyer right now. That's it. But overall, this has been seen as an accumulation in gold right here in this range. That's what's going on. This is where the market is doing 2 things. Either 2 things. 1 is buying, or 2 is selling. That's the only thing that you can get in the market. Okay. So right now, Why would you be bullish in gold knowing that you see price getting rejected at $2,070? Why? Okay, that's it on the 2-day. Here's gold on the 3-day chart. You guys can see here, even though we don't have to indicate it on the chart, that is a push to go down bar right there on the 3-day. Here's gold on the 5. Here's gold on the weekly. Okay, so when you see gold on the 5-day chart and on the weekly, look at where the market closed. It closed off of the lows, so there's buyers in the market in gold. Okay, someone is coming in the market and buying gold right there on the 5-day chart, and then you guys can see it again on the weekly where the market closed. Here's gold on the 2 weeks though. Okay, now this is where you can still see that there's more sellers in the market than there are buyers right here on the 2 weeks. Okay, now the only problem is determining how low the market's going to go, because we've already seen the market bounce off of this high on this 2-weekly price bar. That's one area of where the market is buying right now. Okay, so even though we acknowledge that the market is weak in gold, we can still tell right here around 1960 that buyers are there. Okay, so we may not see the market even go no lower than that. We may already be late into timing how low the market can go in gold, because it already came in here the area of support. Now, if 1960 is not going to hold, then our next area will have to bring it here towards 1920. Okay, here it is on the 3 weeks. So we have 4 days. We have this week in trading to see how the market in gold is going to trade. Yes, currently is weak on the 3 weeks. There it is on the 5, and that's definitely some weakness there. Okay, and I can also see that not only did the market in gold get rejected at $2,070, this area here could be seen as another impactful price to keep the market down right there around 2,000. So we may see the market run up to $2,000, and then more sellers would come into the space and bring the market back down. Okay, so the 3 targets that I'm looking at, it's going to be around 1960, 1920, and then 1880. So let me go ahead and show you all what I'm talking about. Still looking for the market in gold to go lower. Okay, especially as we continue to see it trade below $2,070. The idea is that prices generally has a greater chance of going lower off of that alone. And that first target I told you was going to be right there around 1920. Okay, that is 2.88%, 1920 there. Or was it 1960? The first one was 1960. So it's only 0.88%. It's not even a lot. But I want you all to understand that, yes, buyers are there. Yes, market can move down to 1960 and go up higher and then break $2,070 to the upside. That can happen. So the first target is 1960. Second one is going to be I do like 1942 for support. So yeah, we'll do 1940 as a second target, 1.86%, 1940. And our third one is going to be here around 1920. That is 2.88% there. And then let's do a fourth target all the way down to 1880, which is 4.92%. 1880, $1,079, give or take. Now that may take a while, so don't expect that to happen in like 2 days, but just look for the market to drift and go lower as we go throughout the rest of the second half of 2023. Okay, so yeah, those are the 4 targets that I'm looking at into the market in gold. It is your turn. Hit me up, let me know. We could go a lot lower than that as well too, especially if the United States does, which I do presume that they will, increase the debt limit or the ceiling I don't see why they wouldn't. But hey, anything goes in today's time. Make sure you maintain the profitability, and as always, trade different.